Let me start with a few high-level thoughts on how we should react to the current environment. Remember, hope is not a strategy. All of us want India to recover fast and secretly hope it does. But as a founder or as a business owner, you can't plan with a good case scenario in mind today. Absolutely not. We recommend that you have a bias towards action. This is not the time to wait and watch. And there will be no perfect answers, but you have to take some calls and move forward. While Sequoia and a few other funds will continue to invest, overall, we expect the industry to be quiet and hence fundraising to be a concern. So assume very little funding will be available in this environment and plan for 18 to 24 months of cash. And remember, cash is king. Internalize this and do everything you can to extend your runway. Cut burn quickly and deeply. You should have enough money, like I said, for 18 to 24 months. Don't get into that. Do all this once and cut deep. Also, make very low revenue assumptions and assume a long recovery cycle. Don't assume life will be back to normalcy in the month of May, for example. Create a few scenarios. For example, it could be a bad Q1, okay Q2, and then you kind of limp back to normal. That could be one scenario. Another scenario could be no growth for the whole year, and a bad case scenario could be we are down from last year. It's good to plan and mentally walk down these paths to be really prepared. Test all assumptions, no holy cows in this environment. Don't assume a few things can't be done, just question everything. And I'd recommend sometimes this concept of zero-based budgeting, which is a good way to think about things now. This is a method for you to think about cost without the context and the baggage of the past. If you were to start your business all over again, how would it look now? How would you design it now? That gives you a good way to kind of, throw away some of the old baggage and rethink about, how we should be running a business. A few things that all of us should watch out for now. How you treat your customers, how you treat your partners, and how you treat your employees will be remembered. So empathy is very critical. You have to do what you have to do to save your company, but how you do it will define how you're perceived in the future. So please remember this and act with high empathy. Over-communication is a must. Don't just communicate, but over-communicate with your employees, do frequent check-ins, all-hand meetings, etc. A lot of us are doing this across our portfolio, so this is a good thing to do. Over-communicate with your board and investors in case you have them. Right? This is a time to treat them as one of you and get all the help that you can. Finally, while this is a difficult time, not all is bad news. I would encourage you to change your perspective a little bit from this has happened to us to maybe this has happened for us. And when you do that, you will start seeing a few positives from this situation. First, this is a great time to make fixes. A quote I read today summarizes this well. When fishermen cannot go to the sea, they repair their nets. That is very apt for this current times. If you cannot do much in the front end because we are locked down, it's a great time to go look inside, look at your business economics, your product, and double down and make the fixes happen today. And for some of you who are in a privileged position of having enough capital, for example, this may be a great time to pull away from competition. Another quote, which I thought was very apt, Formula One racer Ayrton Senna said, "You cannot overtake 15 cars in sunny weather, but you can when it's raining." So this may, for some people, be a great opportunity to pull ahead. So maybe the first one is, let me pick this up. Amid the crisis, we are seeing EdTech booming. There's questions on how do we double down, how do we fundraise, how do you...
Why don't you let's, GB, why don't you start with the EdTech question?
Yeah.
And then I can take the next one.
Yeah, sure. So this is Anil. He runs an EdTech company and sees a big opportunity to go. You're right, Anil. We are seeing across the portfolio, EdTech is kind of going through the roof. We have at least 4 or 5 companies in the portfolio that are all seeing significant traction. Schools are shut, colleges are shut, so more people are going online. So it is a tremendous opportunity. And if you're thinking about fundraise now, this is one of the few sectors that actually will have capital available. So you should try and raise capital and kind of try and pull away if you're seeing a lot of traction. So you are in a privileged position where you're seeing your sector actually get a positive impetus from the current situation.
Okay. All right. So let me try to take the next one. Which sectors will grow now? GB just talked about EdTech. I think EdTech, we're seeing a major inflection point in EdTech, an industry that was growing very fast, that is going to go much faster. Online gaming, especially games that don't require new offline content production, So general sort of gaming, I think we're seeing a significant step change in time spent, and I think monetization will follow. So that's another very, very interesting sector. Collaboration and remote working tools. I think all of you we're all on Zoom. We seem to be spending pretty much every single waking minute now on Zoom. So collaboration platforms, communication platforms, lots of tools, that can help in work from home, I think are going to be very, very interesting. And also healthcare, right? So I think we all know this. This is probably going to be the tipping point for subsegments of healthcare, right? Telemedicine and many, many other segments are going to emerge coming out of this crisis. And then the last, I would say the last set of sectors, we're seeing a fair bit of growth. I should say significant increase in consumer demand, but challenges in fulfillment given all the lockdown scenario we have are, basically e-pharmacy, online grocery, and anything that's sort of essential services, food delivery, for instance, right? We are seeing a step change increase in demand, quite challenged when it comes to fulfillment. Obviously, the fulfillment side of things will hopefully get better. Every week, it seems to get better from the week before. But those are the set of, at least the big sub-segments within the startup land that we're seeing that are seeing a significant uptick in growth over the last several weeks. You want to take the next one, GB?
Yeah, I'm looking at the questions. What's your advice for guys starting up now? Look, we always say there's no best way to time when you start. Any time is a good time. This is in fact a great time because you are going to have time to come up with your product, with a solution, and have the time to iterate it through a market, which is not necessarily a hot market. So people have the time, people have the patience to kind of engage with you guys in a time like this. Of course, it may take a little longer to get it to monetize, and people may be a little bit careful about how much they spend, but at least it gives you the time to iterate through the product. I don't necessarily understand what business you're thinking about, but whether it's consumer or kind of a business B2B type product or solution, this is actually a great time. Prices from a market perspective, which are reasonable. So it's a good time to assemble a good quality team. There will be good people who may also be let go by other companies because they're trying to cut burn, etc. So it's actually a great time to assemble a very high quality team to get started.
Got it. There was a question. It's actually gone past. I need to figure out how to go up the chat stream, which I will do in a minute. I think the question was, are VC firms continuing to invest or not? And if they're continuing to invest, how are they going about evaluation, and how have the things that we're looking for changed, right? I think it's a great question. As GB mentioned in his opening, we've already seen that in the March data, the number of investments that have been made, as well as the quantum of venture capital that is invested in India, is down significantly. Obviously, April is going to be much more severe than March, given that at least half of the month we're going to be in lockdown. So I would say a couple of things. One, if you look across the venture capital ecosystem, every firm is going to spend significant amounts of time with their existing portfolio, right? Depending on the firm, either there are many or very large number of portfolio companies, and most companies will actually require significant help from their investors. So I think you should expect that there will be disproportionate amount of time spent with existing portfolio companies. That being said, there will be firms much like Sequoia who will continue to invest. So I think there was a question on Surge as well. So I'll try to weave that in. We actually start our new Surge cohort. The third cohort of Surge very soon. I can't tell you exactly where it is, but it's going to happen very, very soon. This cohort has a set of companies that are truly, truly incredible. And in fact, we've already started, Surge is an always-on program where we will evaluate companies as soon as you apply, and then we'll make investment decisions. So we've actually decided on several companies for our next cohort, which is going to start in September. So that is at the seed stage of investing. But at every stage of investing, Series A, B, C, growth stage of investing, we'll continue to invest. I'm going to have GV talk about that more. But every week on Monday we spend many hours talking to companies and discussing investments that are being made. Nothing's changed from there. I mean, we still meet on Monday. We still talk about companies, and so Sequoia is very much open for business. I think I'll talk a little bit about at the seed stage. I would say, we, for many years, India and the global startup ecosystem was in a growth at all cost sort of era, right? That era began to end about September, October of last year with sort of the WeWork IPO, which didn't happen. I think everybody, founders, investors, got a lot more conscious about unit economics. I think today, it is extremely important that you think about building a business in a manner that will eventually have a viable economic model, right? So this whole idea of, look, I'm going to grow, and then eventually I'll make money, and not being very thoughtful about that actually is not going to work today, right? So again, we don't expect a company to be profitable in day zero or year one or year two, because clearly it takes investment to build a company. But I think being very thoughtful about how will you eventually kind of build a viable economic model has become very, very important. And specifically for companies that have already launched, unit economics were important. Unit economics now are absolutely supremely important, right? So those of you that haven't really focused on unit economics, I'm assuming most of you are now. This is it's incredibly important for you to focus on that. Let me also, GB, why don't you add to this question about
sounds good on the fundraise, right? So like I mentioned when I started, right, it is going to be tough, but many funds are still active, particularly in the early stage. So seed and Series A's, you should see still people active. That is because lots of dedicated funds that only invest in India or have dedicated vehicles for India are still in the market. While they will correct a little bit, most often, people would still be interested in meeting founders and looking at ideas and funding them. The bar obviously goes up, like Rajan was talking about. I think the more difficult stage is if you're a Series B or above, because that space has got less capital in general, and then it was historically more dependent on investors from across the globe, hedge funds and others who were actually active participants in the market. Now, you'd find that actually slowed on, and we saw this last time in 2016, when after a very active 2015, 2016, and some parts of 17 were actually soft years from an investing perspective, and that was because a lot of the capital kind of retreated from the India market. So if you are a Series A plus and Series B plus kind of a company, just moderate your expectation on what the fundraising environment is going to be for you. But that said, coming back to Sequoia and what we're doing, we are still actively looking at companies from our perspective, look, be overly aggressive in hot markets or shut down in markets like this. So we believe there'll still be great founders and great ideas that are worth backing. So we're actually working incredibly hard. Most of us, thanks to not traveling now, are on VCs all the time. So we are completely open, and we encourage you guys to reach out if you think you have a great idea or a business that we should be looking at.
Okay, let's go to a question here. We are into content creation for brand advertising. Any suggestions for us? What will be the effect of advertising and consulting startups catering to small and mid-cap funded startups? So I think, look, as GV mentioned, right? If you're a startup today, figuring out how you're going to extend your runway is super, super critical, right? So what does that mean? It means if you have 3 months of runway, cash runway, make it 6 months. If you have 6 months, make it 12 months. If you have 12 months, make it 18 months. And if you have 18 months, try to make it 24, 30 months, right? That's very, very important. And when you start going through that, and you have to do that in a very thoughtful way, right? And what you will see a lot of companies do is go after, first and foremost, areas like marketing, where they will actually reduce spend, right? So if you look at India today, I think, I'm looking outside the door, there are no cars, right? We all know we can't go out to retailers. And if you're in a non-essential type product, the reality is you actually can't even deliver the product. So you will see, I think we're going to see when we go in, normally, if you go back to the previous economic slowdowns, right? So global financial crisis, 2008, 2000 in tech, go to 1987, 88. One of the industries that gets impacted the fastest is actually advertising, right? Because it is in many ways one of the areas where it's easiest to actually reduce spend. So one of the things you'll see if you're in the content creation business, especially for advertising, is that many of your clients will actually stop working with you for some period of time, right? So what should you then be doing? I think you have to be realistic about how long this is going to last. Usually these cycles, I mean, GV mentioned this is not a 2, 3, 4 week phenomenon. It's going to last many months, possibly a lot longer. So you have to actually be very thoughtful about when could, how quickly will demand recover, right? And the best thing to do is really talk to your customers, stay very, very close to your customers, and they'll start giving you a pretty good indication of when, how deep they're going to cut. Remember, you're going to cut your burn. They're also going to cut their cost, right? And one of the first places they'll go actually thinking about reducing cost is actually advertising. The other thing you could do is if you're creating content, you're better off trying to create content for what I call performance advertising, right? So if you think about advertising as brand advertising, where you're trying to create awareness, you're trying to drive brand uplift, you're trying to impact brand metrics, and the other one is called performance advertising. Performance advertising is advertising that leads directly to sales, right? Or some performance metric. It could be new number of transactions in an app, or actions in an app, or so on and so forth. So try to figure out how you can focus more on advertisers who are much more performance oriented. Now, obviously, the performance ads tend to be much simpler. So, the long sort of tell even a 1 minute or a 2 minute story doesn't really kind of bode well for that. But you'll have to actually change, at least for some period of time, I think, how you're looking at your business, because I don't know how big the company is and who your clients are. But, before Sequoia, I ran lots of different businesses. First thing I'd cut, by the way, is marketing, right? So, and that you should expect that as well. And then for the founders who are on the call, same advice to all of you, right? And by the way, if you cannot ship your product today, please don't advertise to your consumers and try to get them to buy now, right? I mean, yesterday I was on Instagram and I'm still seeing ads of brands that are trying to advertise to me to get me to buy. I mean, even if I bought it, how would you deliver it? What's going to happen is, you advertise to me, I'll try to buy, you can't ship, and I'm going to give you a bad rating, and I'll probably never buy from you, right? So being very thoughtful about advertising, I think, is very important. GV, you want to take the next one?
Yeah. So I see several questions on FinTech and, what should be, what should they be thinking about? So I think number one, I think, look, in an environment like this, funding sources for consumers or whichever segment you are in is going to dry up, because people are going to get careful. They're going to raise the bar on their credit rating, etc. So, you're going to start seeing people, be not able to access, the right kind of credit for themselves. So it is an opportunity in some sense, depending on which segment you're playing. But also remember, not to kind of rush in very fast, because there is a reason why these institutions are stepping back, because this is a time where nobody knows what kind of risk model to run to understand how deep the problem may be, what the level of the crisis may be. So you don't want to go when other people are not lending to go, lend and do a really try to play the market share game, right? That's very, very dangerous. So the most important thing to figure out, if you're an active FinTech company or a lending company, is to figure out the quality of your own collections. So that tells you something, right? Be close to your customers, talk to them, see what's going on in their lives. You need to have a good sense for the pain in the market, because without that, you cannot calibrate whether you should be actively disbursing or not. Once you have some ability to do that, then maybe you're free to kind of find pockets where you think there is actually demand. I'll give you an example. So small businesses are all going to be hurt because, we're down 21 days, we're all sitting inside, we can't go and buy many things, right? But even within this, the guys that are in the milk industry or the grocery industry or some of the others are actually active. They're all, having issues of catering to demands. Demand is going through the roof. So if you are a lender now, you would kind of observe this behavior and say, hey, I'm going to extend credit and working capital lines to this part of the, consumer set, but I will not do it to a, toy shop or a, apparel shop, etc., because nobody's going there. So you have to watch the market carefully, be very close to your customers and decide which way you're going. The other thing to remember is this is a time that banks need help too. Their problems have always been, they have not been very good at digital customer access, etc. So many of you who are working with banks, they have the balance sheets, they have the ability and the muscle to actually lend. If you can bring new customers to them, they'll be open for business. So again, work closely with the banks. That's another way to kind of use somebody else's balance sheet and get going at this point.
Okay, next question. Hello, sir. I'm Deeptish. I'm just reading out the question. Is it the right time to start an on-demand sector? I'm planning to start my on-demand apps in 6 months and was about to go, but COVID-19 disturbed it. Please advise what should be done. Basically, this is on-demand B2B business plan. So I think, Deeptish, look, first of all, it's not clear exactly what you're trying to build on-demand, and B2B could mean many different things, right? So a couple of things to keep in mind, right? I think one, look, this is, as GV mentioned, this is the, we haven't seen anything like it, right? Because what we're looking at here is a global health crisis on a scale we haven't seen in 100 years. We're looking at an economic crisis. And, very quickly, I think we'll also sort of see a crisis of confidence and so on, right? So this is something that is going to impact every single industry across the board, right? It doesn't really matter, with the exception of very few industries that we talked about that have some tailwind. But keep in mind that what we're saying is we don't know how long this is going to last. It's not a 1 or 2 month phenomenon, but eventually, meaning, in let's say a year or two, depending on how long it takes, it will come back. So at the end of the day, people, will go out to eat. People will go out to retailers. People will take, on demand, will use on demand type services. What we don't really know is how long it will take. And that's a pretty serious thing, right? Because if you're a startup, that actually impacts your demand model and your cost model. So, and that's why it's really, really important to think about burn in a very thoughtful way. Now, if you're thinking about launching a business today, right, I think what you should make sure is that, your business can be up and running in some reasonable time of frame. Obviously, when we're in lockdown, most of us, most of you on this call really don't have no revenue. You don't have a business, which is fine, right? We're in a, sort of a global emergency, if you will. But if you're going to launch a business like this B2B on demand, we don't know what it is. But if it's something that you see demand for, meaning it is not going to be structurally impacted, right? So for instance, let's take international travel, right? Eventually people will fly internationally, right? There's no question about that, right? I mean, eventually borders will be opened up. Eventually people will fly internationally. But consumer international travel, will probably take quite some time, right? So if you're about to launch a business and you're going to focus on consumer travel internationally, the most important thing is make sure you have a lot of runway, right? You got to have enough cash in the bank where you can go for 2 or 3 years. So depending on the business that you're about to launch, really be very, very thoughtful about, is this something that is where demand is going to open up pretty quickly, or is it going to take a very long time? And then also think through when demand does pick up, what is the nature of that demand going to be, right? Because, China, it's very interesting, right? China, the whole country was on lockdown for 2 months. And I just saw from one of our startups, early data for the last couple of weeks in China, right? So retail demand seems to be back about 40-50%. But it's going to take probably China another 6, 8, 9 months before it actually comes back. And that's a country that moved very quickly into lockdown, that is taking extraordinary precautions to open up. So long answer to your question, but that's sort of how I would think about it, right? Keep in mind, look, we've overcome every single challenge that's been thrown our way as a race, and we will overcome this one too. What is different about this one is the magnitude of it, the global nature of it, and how long it's going to take. And so that's why it's really, really important to be very thoughtful.
Yeah, thanks, Rajan. So one thing I want to add, and this is also because I'm seeing lots of questions on, how will demand change, how long will this last, etc. Now, we are no experts, but I'll tell you some analysis we did internally, which may be helpful. We looked at the last 4 kind of crisis type situations for India: the Asian financial crisis, '97, the dot-com bubble, and 2001, 2002 time frame, then the global financial crisis 2008, and then we saw demon, which is kind of a disruption. Also, right? So the data suggests that the economy took anywhere between 3 quarters to 8 quarters to recover to the growth rates of pre that dislocation. So we are talking about, between 9 months and 2 years, and who knows if this is the biggest of them all and may take even longer. So, it's very, very hard to predict. From your perspective, Lip, what you can do is actually plan, from your perspective, from a cash perspective, to last at least 18, 24 months. But from a business perspective, plan for every quarter, because, things are changing so rapidly that if this is a sharper V-type recovery, then you're ready and, you can kind of pounce on what the market, recovery has been. But, I would say prepare conservatively and then, be prepared to be positively surprised. Don't go the other way around and kind of head into a very long-term, down cycle here.
Yeah, there's a question from Manan here. Sorry, we're going back and forth, guys. Does Surge invest in startups which are prototype phase? Absolutely, right. Look, it's never too early to apply to Surge. In fact, in our Surge cohort 2, our last cohort, which actually ended in January, we had 20 companies in the cohort. We had 6 companies that were pre-launch, right? So we look at really 2 things, right? We look at amazing and incredible founding teams that are going after very large markets, right? So those are the 2 things that we look at. And then if you've launched, then we'll also look at the metrics to see, how's the business tracking, and are there early indications of, most importantly, customer love. So the short answer to that question is, it's never too early to apply to Surge.
So I see a question from Uttam Gowda. Do you see tailwinds in the food safety theme playing out in cases like meat, seafood? Will people kind of look for alternatives to the risky wet markets? I think the short answer is yes. We are already seeing some of these startups that are in meat delivery seeing significant demand. People are going to change behavior, and some of this happens slowly in general, but this is a, kind of a jolt for people to kind of wake up and say, hey, I need safer alternatives. This is not just true for, seafood, meat, etc. It's going to be true for overall food. So the branded players, organized players with better hygiene, better ability to communicate that will end up taking market share away from the unorganized players. So we could expect over time regulations on food safety to kind of include more categories such that food safety becomes more important and is kind of seen as something that consumers have the right to. So I do think this is going to be an interesting theme. Related to this, there was also questions on consumer behavior changes. So this is one good example of consumer behavior change you may see. We also think these times, given how online grocery is taking off, we'll see more people order online. So there'll be more behavior towards online, whether it's education, whether it's grocery or other e-commerce. There will also be more move towards digital payments. It's already clear that players like BigBasket and others are saying they would only take, online payments, etc. Because they can. They just demand is shooting through, and then they want behavior where they don't have to deal with returns or things like that. So we're going to see digital payments go through the roof as well. So there will be some change in consumer behavior, which will be a long-term win for companies that are technology enabled or mostly online.
Yeah, there's a question from Kinjal Shah. Rarely startups from cities like Ahmedabad, Gujarat get noticed by VCs. Is there any specific reason VCs prioritize startups from the cities like Bangalore, etc.? I think similar question from Karan as well. Look, the short answer is, we think ideas come from everywhere, right? And, we really, actually not just Sequoia, but I don't think any venture capital firm in India is focused only on a few different cities, right? So I would say, regardless of which city you're in, if you have a great founding team and you're going after a large market, and if you've launched and if you've got a very strong traction, you should reach out to firms. So I can tell you that, we don't, no firm and I don't think any firm really does prioritize. I think the reason you see many more companies from Bangalore, from Delhi NCR, from Chennai, Hyderabad, for instance, in SaaS getting funded is because there's just more companies there. But GV, you've got, we have made investments.
Yeah, we have made several investments actually. We have investments in Indore. We have some investments that started in Pune, Calcutta, other places. We were at one point very close to investing in a company in Erode. So we don't have a problem in reaching out. And actually, I actually think it's an interesting thing now that much of business is being conducted on Zoom. It doesn't matter where you're sitting. So from our perspective, we'd love to reach out to wherever you are. In fact, when we invested in Cardeco, they were based in Jaipur. And then they moved to Delhi because they found quality of talent and depth of the high quality talent was higher in Gurgaon versus where they were sitting. So from our perspective, what we've observed is smaller towns and cities actually have low cost structures of operating. So if you're able to manage good quality talent there, you probably have an advantage versus other people. So we don't have any preconceived notions, biases. Like I said, our business is there everywhere. Jaipur, we have an couple of investments in Jaipur actually. So we are very open to business wherever you're located.
Actually, just to build on that, I saw one of the questions very early in the thread was a startup from Bangladesh, and the question I think was, if you're sitting in a country, if you're from a country like Bangladesh, how do you attract international investors' attention? So actually, in our Surge first cohort of Surge, we made Sequoia's very first investment in Bangladesh. It was a company called ShopUp that we are super excited about. So again, right, it's not just which city are you from India, but Bangladesh. I mean, we are focused on as Sequoia Capital India. We are focused on India, South Asia, and all of Southeast Asia, right? So it really doesn't matter where ideas come from. Going back to that question on how do you attract attention? Look, I think make sure that you have a very strong team. So that your team, the big team that you're building is very strong, and you're going after a big market, right? And then if you've launched, make sure you're building a viable sort of economic engine. What I mean by that is, your unit economics are strong. You've got sustainable growth, things like that. And in terms of reaching out to investors, you can write to us or you can write to any venture capital firm. But for instance, if you're in Bangladesh, the fastest way to get to Sequoia is actually through ShopUp, right? So because we actually have have an investing company there, because when a startup gets referred to us by, let's say, a founder that we know well, maybe a founder we've invested in, or a founder that that we know, that we respond much faster because, that's something, company that we know. But regardless, look, we look at every single email that we get, and it's not just email, LinkedIn invite. We get plans sent to us many different ways, and we do look at it. So I would say if you're building a very interesting company, we'd love to hear from you.
Yeah, I'm seeing some questions on, how do we avoid this in the future? How should we be better prepared in the future for such black swan events? Look, by definition, black swans are not expected to be frequent. So hopefully, this kind of a once in 10 years, but quite honestly, black swans have been more frequent than we all assume they are. The most important thing is to remember that, you need to build margin of safety in whatever you do, right? So you kind of, for example, if you're a highly levered startup, you have lots of debt that is being used instead of equity to build a business, then these kinds of times can hurt you quite badly because lenders will want to take back the capital. Equity capital is risk capital. So, in a bad case, companies shut down, equity investors lose their capital, but that's kind of gives you some margin of safety. Second, always when you're raising money, raise with enough buffer in mind, right? Like many times we find founders being very dilution sensitive. So they want to raise just enough and then believe 12 months later their business is going to have hockey stick growth. So why don't I raise at much higher prices? Then while that is, a reasonable thought process, these kinds of situations when these events happen, that actually really bites you, right? So from our perspective, we always advise companies to have long runways, to have very low leverage, to have a business that ideally is economics positive and funds for itself, because that's the true independence, right?
If we find the right kind of company, meaning, awesome founding team, going after a space that we really like. As I said, India, South Asia, Southeast Asia, we are very open to it. Let me also take this next one. Hi, Rajan and GB. We are an online D2C brand in bags, luggage, accessories space. Purchases here have traditionally been majorly offline. What is your view on what will happen once the situation improves? We are expecting a shift to online with purchases delayed now to come back. Do we expect them to come back with a burst? But is that fair to assume? GB, you want to take that? GB is a guru of all things.
No, thanks. So look, online luggage space is interesting. Supply chains are mostly in China. So, we're seeing a lot of these kinds of companies, and obviously lots of them are modeled on this company called Array in the US, which has built an interesting unicorn out of this. But remember, this is very, very linked to travel situation, right? So you are a derivative of travel, and, this industry over time will continue to grow quite nicely because more people will travel, and that's absolutely given. But in these situations, you should not expect a quick recovery. Even if we move out of lockdown, we are expecting some restrictions on travel. Certainly international travel will be more restricted. So I would not assume, that you should expect a very speedy recovery, whether it's in Q1, end of Q2. Who knows how long this will last, because especially winters, people are talking about the virus kind of coming back. So there may be a second attack, who knows? So I would say, start small, start in a way that you can, sustain yourselves until the market comes back. And I see lots of questions on travel companies and so on. Look, it's unfortunate, but it's a very tough market to be in right now. Most people are down between 80-90%, and even the very large companies that are globally well known in travel, whether it's accommodation or otherwise, are all down 80-90%. So this is a time you got to cut your fixed costs and survive, like literally hibernate, and wait for markets to come back. And they certainly will. Like Rajan said, people will travel. This is one of those things as the per capita GDP goes up and you have more disposable income. Travel is one of those sectors that actually takes off. We have seen structurally over time, people are replacing consumption with travel, meaning, lots of people are saying, okay, I don't want the car, I don't want that house. Why don't I, use that money and actually build on experiences that we get better travel experience. So, in the long term, you are in a great spot, but in the short term, there is pain. So just embrace, for some difficult times.
Okay, this next question, I think we've answered part of it, but for the next few quarters planning, should we assess and predict the change in customers' behavior right now, or should we wait for some time, i.e. say lockdown is over, as any feedbacks will be impulsive and panic-based? So look, I think, as we said, look, we don't know how long this is going to last, right? Let's take the current lockdown that we're in. Current lockdown is supposed to be over on April 15th, depending on number of cases and what we see over the next 10, 15 days, that may or may not happen. So even something like lockdown, we don't have clear clarity on, right? What we do know is that, you need to, a country or a big city, which is a hotspot like Wuhan, needs to be locked down for 2 months. Otherwise, it's very, very difficult to get this under control. And then it takes a long time for demand to come back. I think what's really important is depending that on the industry that you're in, try to build out a few scenarios. And GV talked about that. And I'm actually going to post something in a minute here. A couple of days ago, we, all the venture firms in the industry, together with a bunch of founders, we actually developed a set of perspectives of, if you're a founder or founding team, currently in this COVID crisis, what should you be thinking about, and how can you think about planning? How can you think about controlling your costs, all the way through, how should you think about employee safety and so on. So I'll post that here. It's very difficult to answer not knowing exactly what the business is. What we can tell you, for every single one of you, it doesn't matter what size of company, what kind of industry, is the business plan or the operating plan that you had 2 weeks ago is no longer valid, right? So that is not valid at all. So what you should do is try to model out a few scenarios for your business, because every day that you wait, especially, because if you're in a zero revenue business, right, it's costing you cash that's actually should be in your runway, right? Remember, the whole model here is increase runway, not decrease runway. So the more you wait, the more you're going to decrease runway, and that's going to be very, very tough. So while GV takes the next one, I'm going to just post this.
So there's a question on event industry, and event and travel are somewhat similar in that right now this is a tough time. We have seen it in some of our portfolio companies globally that eventing ticketing has just completely crashed. While it looks tough, and we'll have to wait for things to come back, I just want to point out some of the opportunities that you guys may want to think about, whether it's travel company or event company. The reality is people actually do want to conduct events. People do want to travel, right? And let's take events as an example. A lot of the events are now moving online, right? Now, is there an opportunity to kind of help with that? Like, not a lot of people have the capabilities to manage an event that is run online. It actually takes effort. And, even doing one of these AMAs does take some effort in planning and getting it right, etc. So there may be a new set of opportunities that allow you to kind of design for virtual events. What could be replacements for leisure travel? Maybe there are other opportunities that show up, which you can take advantage of. Right? So I would encourage you, when you have the time, to kind of figure out what the new product requirements may be for a market where the demand exists, is just not going to show up in the near term, right? So there may be other needs. If you guys can talk to your customers, understand what's going on in their lives and how you can be helpful to them, I do think you'll come up with solutions that could help you stay afloat during this tough time.
Yeah, actually, just to on events, I'll tell you something that I'm very close to, right? So I'm deeply involved with TIE, the Indus Entrepreneurs, the not-for-profit, focused on startups. And TIE Delhi NCR is one of the largest chapters in the world. And it's a not-for-profit, so we do these events and we do lots of other engagements to help startups and entrepreneurs, right? And it was largely a business model that was offline, right? So I don't know, for the, regardless of where you are in India, you've probably gone to a TIE event or not. It's a whole set of events. It's a whole set of offline activations and so on. So, we decided, just to give you a sense of how quickly you need to decide, right? We decided 3 weeks ago that let's just assume for the rest of the year, we can't run a single offline event. And we've completely pivoted, and you'll see, and GV's point, you're going to see this, right? So we've completely gone to online events. And the first thing we found out, that our reach, the ability to reach, has gone up by 5 times, right? Because, if you had a small event, we'd have 100 people. If you had a big event, we had 2,000 people, right? Now, if you have a small event, we get 1,000 people. Because all of a sudden with digital, it's not just Delhi NCR, right? We can pretty much reach the whole country. In fact, the other day we had a Thai panel, and we had people dialing in from all over Asia, right? Which is quite interesting. Now, the next thing we're going to try to do, we're going to do this after we get through COVID. So it's probably going to be a couple of months from now, right? We're going to start layering sponsorships, right? So when you have events, you get large brands to actually sponsor, and that's how you're able to pay the bills, right? Now, if we can get, and I'm actually pretty confident that we can get large brands to sponsor, because the brand awareness that you can drive, through digital events is much higher, right? Because it's right in front of you and you can see it. And second, what's very, very interesting is when you go to online events, your only cost is Zoom. You don't have to pay for the venue, the hotel. You don't have to pay for food, which actually are the single biggest cost, right? So I think, as GV was saying, and I think this is really, really important to all of you, is think about how you can use this time to reimagine your business, right? In some cases, it'll be a radical change. We just talked about the events business. That's a radical change, right? Everything and how you're going to do it is going to be different. But it's a great opportunity. You almost, you're forced to do it, but it's also a great opportunity to do it because you're going to find all kinds of new things about consumer behavior. Like, for instance, we're finding that people would much rather go to a 2-hour session that's virtual instead of traveling 1.5 hours and sitting there all day, because now they can actually go to the sessions that they want to go.
So I see a question on, hi, Mr. GV and Mr. Rajan, how do you see COVID affecting the valuation of startups? What percentage discount in valuation should be expected? Look, I think getting funded itself is a good event in these times, given, most people are not as active as they may have been a few weeks ago. So to me, I think the advice that we are giving our portfolio, and that's the same thing we'll give to you guys as well, is don't focus on valuation. If capital is available, please take it, because that could be a big difference between, the winner and the companies that kind of don't make it, because capital will help you see through the situation. Like I said, cash is king. This helps you, extend your runway, and it's super important. So, while it may feel like, this environment is going to create a valuation issue, also remember, there will be other times when the markets are much more hunky-dory, where you will get valuations that may be more than fair. So it kind of all averages out in the long term. So our recommendation is don't focus too much on valuation and dilution. If somebody is willing to fund you and that will allow you to extend runway, please take the capital. And we kind of, the last time when these things were happening, people are talking about flat rounds being the new up round. So it is somewhat similar now as well. Like if somebody gave you money at the same price as something you raised 12, 18 months ago, it's still not such a bad thing, because, you remember that the risk has gone up for the person that's investing as well. There's lots of uncertainty ahead. So, you should expect that they will want a lower valuation in the current environment.
Okay, next question. This is actually from an entrepreneur in Indonesia. I'll read out the question. I'm building a company that is leveraging the growing social impact industry. Our user base includes social orgs, social enterprises, and socially conscious millennials and Gen Z. We are on track to launch in April, but we need capital to grow and sustain as we are completely bootstrapped with runway of 3 to 4 months. How do you recommend we move forward? We are a social network, so we need to grow faster in order to establish network effects. I think it's a great question. Please keep in mind right now, your goal is survival, not network effects, right? Because you have to survive to be able to grow. So I would say, look, for your kind of business, I don't know where you were planning on raising capital, but you should look for grants and other alternate forms of capital. There are impact funds. I don't know whether there are impact funds in Indonesia. You should reach out to them. But to GV's point, keep in mind that lots of decision making about funding is going to get delayed, right? So the most important thing that you can do is extend your runway, right? If there's a few messages you can take away from us during this hour, one of the most important ones is going to be extend runway. So this is a great example. If you've got 3 to 4 months of runway, find a way somehow to extend your runway to 7, 8, 9 months, right? Second, start looking for alternate sources of capital, especially grants, people who are passionate about the kind of things that you're trying to do, because you'll have to actually go. And then finally, to GV's point, this is not the time to be concerned about valuation and even things like terms, right? Because if there's money, take it.
Yeah, there's a question from Samir Agarwal. Hi, GV, we're a fintech lending company, education focused. We're starting to receive some requests on deferment of loan EMIs. Any suggestion for companies like us? Now, look, obviously the RBI has come out and spoken about term loans will get a 3-month moratorium. Quite honestly, lots of the terms and what this means is not fully clear. Lots of our companies in fintech and NBFCs and others are trying to reach out to RBI for clarifications, and banks are all taking different stands. But remember this is kind of news that has reached the retail market. Most people assume that 3 months moratorium is like a freeze without having to repay anything. I think this the industry needs to take up on itself to make sure we actually over communicate to consumers to tell them that this is not a deferment of the loan. I mean, it's only a moratorium, but your interest clock still keeps ticking, which means after 3 months, you're expected to pay the interest that you did not pay for the 3 months along with your EMI. So it is upon all of you to kind of educate the consumers that they've got somewhat a wrong understanding of what the RBI has told. So I would request you guys to work with other companies in the NBFC and fintech space to educate the consumer. Would you have to do this? I suspect you do, because that is the expectation from the market. You have the liquidity to be able to do it, please do it. You should also go back to give you some deferment of your payments. So if you're able to match your assets and liabilities, then we should be able to wait through the situation.
Okay, next question. This is on SaaS. For SaaS companies, there's a rule of thumb that a healthy gross margin should be 70 to 80%. But with the market condition where customers are cutting cost, is that important to keep that margin, or is it still okay to sell at lower margins, say 30 to 50%? So look, if you're a SaaS company, or if you're any company for that matter, right, hold on to your customers, because, and that's very, very important, right? So customer centricity and deep customer engagement has never been more important, because remember, all your customers are going through pretty much what you're going through, right? How can they get more runway? How can they reduce costs? How can they actually protect revenue, and so on and so forth? So be very, very close to your customers. I'll give you an interesting anecdote, right? Exactly 12 years ago, well, not 12 and a half years ago, 2008, I was leading Microsoft in India, which is a very large business. This is a massive business, right? Every single one of my large customers, every single one, okay, I'm not talking about like a few, every single one of our large customers did one of three things, right? They wanted lower pricing, they wanted better terms, or they just got out of the contract because they couldn't afford to pay anymore. So when you get into a crisis like this, keep in mind that all your customers, and if you're lucky, maybe it won't be all, but it'll be many, will actually want some level of relief from you, right? And the right thing to do is listen to them, understand what they're trying to do, and try to abide by this. So, for instance, I'm very closely involved with a SaaS company that sells into the retail industry, right? So, what they've decided to do is for all their retail customers, for the period of the lockdown, they're not going to charge them. Right? And that's a proactive thing that they did, because the reality is, if you're a business, you don't have any revenue. How do they expect, for you to? Now, this is a pretty large company, and they were able to do that, right? So I guess what I'm saying is, do whatever it takes to keep your customers if you have them. That's number one. Number two, if you're an attacker, keep in mind that it's okay to go in with slightly lower gross margins, but keep in mind that once you get a customer at a certain price, it is going to be very difficult. Think about it, right? If you have a 30% gross margin as you go in with, and you want to then trend up to 60% gross margin, that's going to be very, very difficult to do, because no customer is going to pay you 2x or, so much more. You don't have, you have to get another 30, 40% revenue, right? You have to take pricing up. So I would say, if you're an existing business, especially a SaaS company, stay very, very close to your customers. And trust me, you will have most of your customers who will want to do one of those three things. The other thing you should watch out for, if you're a SaaS company, is your receivables, right? So there's a term called DSO, days sales outstanding. If your DSO is 60 or 70 days, you should expect it's going to go to 100, 110 days, or maybe even longer, right? Why? Because one of the things companies do when they get into a situation like this is they delay payments. Much like many of you will delay your payments, they will delay their payments to you. And that is really important, because it has implications on your cash flow. Right? If you think about cash runway and how much runway you have, when we say do the detailed modeling, and by the way, I did put that document. It's a Notion document, a Notion post that we did. I put it on the chat link. Hopefully, all of you are able to get it. Please do take a look at it. The huge amount of effort went into it from all the venture capital firms in India, and hopefully you'll get something out of it. So those are just some thoughts if you're a SaaS company.
Yeah, I'm going to pick up the next one. Arjun Thomas is asking a question around raising capital for an F&B startup, given the impact of the traditional F&B sector due to restrictions around socializing in public and the change in behaviors that might be expected. Is it worthwhile raising capital for a business that focuses on tapping into the market opportunity where socializing at home starts being the norm? Arjun, thanks for the question. Now, look, there will be a near-term behavior change, which is maybe a fear of going out and socializing in public places, etc., until there is a vaccine for COVID-19. In the long term, socializing has different aspects. So, if you take the F&B aspect of it, is there an opportunity to kind of create an option for people to socialize at home? This is roughly like servicing events, right? So, if people are kind of throwing a party at home, is there a good solution for that today? Maybe not. It's a pain point. I wish somebody solved this. That's an interesting problem to go after, because, as more events happen at home and so on, somebody needs to kind of take care of the end-to-end organizing of that, including food and kind of the things around that. So it is a good opportunity. Is it a good time to fundraise for that? I don't know. I do think you will find some interest from angel investors for an idea like this. It's a good place to start, but you'll have to build a larger kind of an opportunity around this, catering to the entire events flow from a socialization perspective.
Okay, so the next one is, I think, a question that many founders are facing right now. 80 to 85% of our burn rate is basically on salary. Do you have any experience, other ways to extend runway aside from laying people off? I think it's a good question. So keep in mind, by the way, the last thing you want to get to is people cost. Anything else should be people cost, right? Every company has lots of other costs, right? So I've always been a believer, especially in times like this, there is no such thing as fixed costs. There is no such thing, right? So what does that mean? So let's say your lease that you have, right? Make sure, try to renegotiate your lease. Look at every single contract that you have, try to renegotiate them. This goes back to SaaS company. Remember what's going to happen to you. You should be actually looking at all your contracts, right? Marketing, you've got to completely rethink marketing, right? What's the objective of marketing? What are you going to do with it? So on and so forth. And you can keep going through all of these, all of the different line items, right? And then you get to people cost. And people cost, the way to think about it is, all of this, by the way, needs to start with the model that you build. Build the different scenarios depending on how much cash in the bank that you have, and depending on the scenarios that you pick, meaning, it won't be one scenario, it'll be 2 or 3 scenarios. Figure out what it's going to take for you to dramatically extend your runway. If you've got 3 months, make it 6 months. And that is what instructs you to say, how much more do you need to really reduce from your operating expenses to be able to double or more, more than double your runway, right? So it's a very mathematical thing that you need to kind of do. But when you get to that, when you come to your people cost, right, we are seeing founders, across India and many parts of the world do a number of things, right? Many founders are actually taking their own salaries either down to zero or taking a significant reduction in their salaries, right? Second, they're actually having their next level of leadership take significant salary reductions, right? So salary reductions cascade. So the founder needs to take the biggest cut, usually what we're seeing, and it cascades down. And then some of the most junior folks sometimes, they don't really impact depending on the salary. So that's the first big thing, right? Second, you can do things like, look, if let's say a specific functional area is deeply impacted, right? So let's take sales, for instance, right? If the sales teams cannot be selling for the next, let's say 3 weeks or month or 2 months or whatever, it's reasonable to say, look, in this period, we'd like to defer your comp, right? So that could be something that you can do. And I hate to keep coming back to the Notion document that we just posted, but we've tried to outline all the different levers that you have in that Notion post.
Yeah, I just want to add to Rajan's point on the Notion document. A lot of the folks from the industry have taken their learnings from portfolio and what they've seen to come up with it over the last 7-10 days. So it is actually a useful resource. Please take advantage of what's there. There was someone who asked about, in the context of cost cutting, what are VCs advising their companies and how to keep this ethical, because some people that may be well funded also may take advantage of the opportunity. Look, it's a great point. Which is why I spoke about the fact that you will be remembered as to how you treat your partners and your employees and others. So it's very important that you don't use this time to take advantage of others. What you do should be fair. If your business is affected, we also will find a way to let you know how you can reach us. A lot of people are putting your own businesses and ideas on wanting to reach us. So I'll request Payal or someone else maybe to just in the chat window add how you can reach us so that some of that traffic can deal with separately.
Yeah, absolutely. And to that point, look, if you're a seed stage company and you want to apply to Surge, just go to the Surge website. You can submit your application. And there was a question around AgTech. In India was a company called BJAC, which is based right here in NCR that we're very excited about. And you'll hear a lot more from us in terms of our levels of activity in the ag value chain, more broadly. Okay.
Okay.
TV, next one.
Yeah, I'm seeing some questions around how has the VC industry been affected? Look, I just want to let you guys know that we are not, kind of in any way insured from being affected. We are equally affected because our portfolio is affected. So, what we tend to do in these circumstances is to make sure that we can be super supportive of our companies, help them make some of these decisions. So we are all working incredibly hard to help our founders make the right decisions. We also support financially where we can, when companies, for no mistake of theirs, get into trouble and need some runway, etc. So we're all, very affected. So, I have 2 minutes left. So I do want to make sure that you guys know about one of the initiatives that both founders and VCs have come together to do. We have seen extraordinarily good cooperation from folks, both founders and VCs that have come together to create a program fund called ACT, which is a grants fund. It is basically meant to give wings to ideas that are helping prevent and slow down COVID spread or even cure COVID. A lot of the VCs and founders, like I said, are putting a lot of their time into this. And we encourage you guys to kind of look this up. It's on a website called actgrants.in, actgrants.in. So I encourage you guys to look it up and recommend others to join this.
Great. Hey, sorry guys, I just realized that I was posting the Notion link only to the panelists, I was posting it to GB and myself. So I'm just going to post it to all the attendees. I'm sorry about that. No wonder some of you couldn't find it. Well, we're right about 5 o'clock. We started on time, so we should end on time. First and foremost, thank you everyone for joining us. We know that it's a very, very difficult time. If there's one thing you can take solace in, neither GV or I have seen anything like this, and nobody's actually in business today has seen anything like it, because we haven't seen a crisis of this scale in 100 years, right? So if you're really trying to figure out what to do, you're not alone. Just about everybody in the world is trying to figure out what to do. But I think it's important to think through, leverage all the resources, advice that you can get, leverage the frameworks that you can find, think through it very, very deeply, but be decisive, because being decisive as a founder has never been more important than it is today. And I'm going to hand it over to GV for closing comments.
Well, thank you, Rajan. Thank you guys for all your time, and we may not have been able to answer all your questions. Apologies. We are going to do this almost on a weekly basis for the next several weeks, so you will have more opportunities. Also, we'll probably leave back an email ID or some way to reach us so that you can send in your questions. If you have a business that you feel we should look at closely, we will send you an email ID again for you to reach us. Stay safe, stay balanced. I do think many times we kind of think this is the end. It is not. This too shall pass, and we have seen this many times over. So while it is unprecedented, we also think we will all win over the situation. So remain balanced, remain optimistic, but be decisive. Do what it takes to kind of get through this tough time. With that, we sign off. Thank you so much for your time. Really appreciate you guys listening.
Thanks, everyone. Bye-bye.
Thank you. Bye.